Hello everybody, welcome to this special presentation. Today we have the honor to host Mr. Robert Cariglia, CEO of DealNet Capital. It's a company that does outsourcing, so Mr. Cariglia is there with us to tell you why his company should represent your potential next investment. So Mr. Cariglia, thank you for coming by.
Great, it's a pleasure to be here. Thank you.
Excellent. So let's talk about your business model. Can you describe us what it is and how do you generate revenues?
Sure. We're in the outsourcing business, and essentially what that means is that our clients are entrusting us to do a whole array of communications with their clients. And we do it in a couple of ways. One way is through our call center company. We've got a call center in Toronto, a call center in Reno, Nevada, and through our mobile marketing and text messaging company based out of Toronto. And what we're able to do is we're able to go to our clients who are some great companies that everybody would recognize. And we're able to get anywhere from a 3 to a 10-year contract to provide this communication to their clients. And we really become experts on their business. And of course, we're already experts in how to communicate and when to use what technologies.
Okay,
and so what we do is we sign these long-term contracts and get paid on a monthly basis.
Okay, so there's recurring revenues.
Recurring revenues. It's actually one of the hallmarks of our business is recurring revenues, and we like recurring revenues because it's predictable.
Okay. Now you have two segments in your business. You have the engagement business segment and the financing business segment. Can you tell us both about the challenges and opportunities that both of the segments face?
Sure. Well, and a lot of people ask us, it's interesting that you're an engagement company, but you've got this financial services company as well. And when we look at one of our clients, we look at what ways or what services can we provide to them to make their businesses work better, to make their lives easy. And in one of the industries that we were looking at, the heating, ventilation, air conditioning, or HVAC industry, there was a natural opportunity to provide not only services to our clients, but also finance and rental contracts to our clients. So, the way we approach our customers, and one of the opportunities we have is we're one-stop shopping. You come to us and we can communicate with your customers through live agents. We can communicate to your customers through text messaging, through mobile applications. Plus, where warranted, we can also help your clients out by providing finance solutions as well.
Okay. Give us an example, for instance.
Well, a good example would be in the HVAC industry, we basically sign up dealers. And a dealer in the HVAC industry is someone who would come to your home and quote you on putting a new furnace or a new water heater in your home. They would do the installation and they would do the service over the life of that equipment. So they use our services. They use our marketing services. They use our call center services. But what is happening in the world is a lot of people not only buy their HVAC equipment. Let's just use furnaces as an example, but people are renting them.
Okay.
And so what you do is you own your house, but you rent your furnace. And for $59.95, we can give you a 10-year contract at $59.95 a month. And you basically have that furnace installed, and it's service-free, it's maintenance-free because it's all included in the rentals. So it's really like off-balance financing for a homeowner. They can put the equipment in, obviously, in Canada in the winter, you want to have a furnace that works, and in the summer you want to have air conditioner that works, and we can provide that at a very low monthly cost.
Okay. Now, in terms of growth opportunities, one of your subsidiary, I would say Impact Mobile, just expanded into Brazil. But what I was reading in your corporate presentation is that your company was mostly focused on North America. The fact that they expanded into Brazil, is that the beginning of a new era where your company will not be solely focused in North America, but rather into emerging markets like Brazil or others?
When it makes sense. In this particular case, it was two of our customers that took us down to the Brazil market. And these customers, very well known, a beverage company, and the other one's a packaged good company. And they're, when you look at the South American market, it's very text-centric.
Okay.
Everybody communicates by text messaging. Your smartphone is really the center of your world. It's not only, it's your phone, it's your organizer, it's your wallet, it's your camera.
Okay.
And so what's happening is in advance of the Brazil Olympics in 2016, a lot of companies are going down there to establish their presence and to get their marketing programs going. And if you're going to participate in the South American and Brazilian market, you definitely want to have a text messaging component as part of your marketing effort. So they invited us to go down there, and when you take a look at the marketing, when you take a look at Impact Mobile and our engagement business, and you know how we communicate with our customers through text messaging and mobile marketing, it's a natural.
Okay.
So you know, it's not so much that we have a strategy that we're going to go to developing markets, but when it makes sense, very easy for us to either work with existing customers or look at new customers in those developing markets, and we'll continue to do that.
Okay. Now, concerning the financing business, what proportion would you like it to take? Because right now the engagement business is taking a big portion of your revenues.
Yep.
In terms of the financing business, like which proportion would you like it to take out of your revenues? More or the engagement business, or?
Yeah, that's an interesting question. That's like saying how high is up, right? We really established, you know, the financing business is something that we've been working on for about a year and a half, and we launched it in early September of last year, and we see that as being a huge growth opportunity for us. Again, as I said, there's more than 80,000 dealers in North America, and right now we're operating in Ontario. We have 30 dealers, but we're working with a partner who's introducing us to well over 400 dealers. And our opportunity is to expand into Western Canada. You know, we're already in Eastern Canada, expand into Western Canada, and ultimately into the US as well. In 2014, that finance business was a very small part, but we anticipate in 2015 it will be about 20% of our revenue, and it will grow.
Okay.
And the reason being is when we sign a 10-year contract, you know, you're one of our clients, and you sign a 10-year contract, that furnace for $59.95 a month.
Yeah.
You're going to be paying us that $59.95 for the next 10 years and beyond.
Okay.
As we add more contracts, as we add more dealers, as we add you know, additional geographies, our portfolio of revenue generating contracts explodes.
Okay.
And so we see eventually that the finance business could be significantly larger than our engagement business.
Okay.
Not to say we're not going to be growing the engagement business, because we have huge opportunity there as well, but we really see the finance business over the next couple of years as being a significant part of our revenue, and it's highly profitable and a great cash flow generator.
Okay. In terms of the engagement business, where do you see the growth opportunities? Mostly in North America, or in a country like Brazil, for instance?
You know, North America is such a huge opportunity.
Okay.
And let me, you know, particularly on the call center side, a lot of people say, geez, I thought all call centers went off to India or the Philippines. Well, they did. Not all, but many did. But when you look at it, a lot of that business is coming back to North America.
Okay.
And the reason being, especially the voice solutions, and the reason being is we've all had, you know, the incidents where you're talking to someone whose language may not be exactly what we expect, and the culture fit may not be exactly right. And these are, you know, to a company, your customers are the most important asset you have. And yet we're willing to take those customers and hand them off to somebody in a different country who may not understand what the situation here is here in Canada or the US. So what we're seeing is a lot of that business is being brought back to North America. And we're seeing, you know, especially in the US, because of privacy laws and so on, a lot of that business is mandated to be on US borders. One of our big banks that we do business with in the US, we had to demonstrate that the 100% of the business and 100% of the data was going to be was going to remain, I should say, in the US. So, you know, we see that as being a great growth business. On top of that, the outsourcing industry, the traditional call center business, if you wish, between 2009 and 2020 will more than double to almost $1.5 trillion globally. And that's because smaller companies are starting to use companies like ourselves to outsource their activities. We can do a great job for them, and it's much more cost efficient for them to outsource than to try and replicate that in-house, especially if you're a small to medium-sized company.
Okay.
Now, the other exciting part is on the mobile marketing and text messaging. You know, anybody under 30 these days, you know, I've got kids, you know, they're 18 and 20 years old, and I don't even know if they know how to use a telephone, but let me tell you, they are attached to that, you know, that smartphone. And that has really become how they connect with industry, how they connect with, you know, business, and how they connect with friends, obviously. So we see a huge opportunity of growing that segment of our business. Not only through traditional mobile marketing and text messaging, but also through something called proximity marketing. And that is where, our smartphones put out a signal. So we know when someone is in a particular store or a mall or a hotel, and we can communicate with you based on the fact that you're at that specific location. And, with your approval, of course, you have to opt in. We can send relevant information to you based on where you are, not based on where you might be one day.
Okay. Now, this statement that you just made, actually follows the next question here, because you do have some important customers. We have Wells Fargo, Rogers, and you are targeting companies such as Couche-Tard, Loblaws, and McDonald's. What steps have you taken to get close to those potential targets, and what services could you offer to companies like Couche-Tard, Loblaws, or McDonald's?
Well, again, because we're in the customer communication business and the engagement business, there's a whole array of different services that we can provide. And one of the things that we provide to them is proximity marketing concept. If someone is in one of those locations, again, it gives the company an opportunity to push information to them that both their clients want to hear and can be very beneficial to a company like a McDonald's or a Couche-Tard.
So you were talking about cash, Robert. Well, how much cash you have, and how do you intend to allocate them in 2015?
Yeah, we have about $500,000 of cash, and basically what we're looking to do is, this year's all about execution. We've built our engagement business, we have built our finance business, all of our divisions are operational and some great opportunities. And we want to make sure that we've got cash to support our growth initiatives. As we bring on new customers, obviously there's a need for growth capital to support the ramp up until we start seeing the the flow of revenues coming back from those customers. So clearly, as we build up the business, we need to have cash and we need to have access to to cash to do that. We're also very judiciously looking at acquisitions. There's opportunities to add additional capabilities to our existing businesses. And if those opportunities came along, we're looking at some in early stages right now. Obviously, we would need to have the cash and the access to funding to be able to acquire those companies.
Okay. Now, the 1 minute left for the interview, but in terms of viewer who's looking at this interview right now, and would like to know, why should we consider DealNet Capital as its potential investments? Could you give him 3 reasons why they should consider DealNet Capital as its potential investment?
Sure. First of all, our stock is currently trading at 19 cents, and it is hugely undervalued. Of course, you wouldn't expect anything else from a CEO, saying that. But I take a look at it. We've doubled our revenue every year. 2012, 2013, 2014. We, in 2015, our projections are to double again. And remember, this is recurring revenue, so I already know that about 65% of it is already in the bag. So number one, that's one of the reasons. Number two, we've got great gross margins. We margin on average about 35% or more. We're fully built out. We've put all of our investment in the company, so we don't have to spend a whole lot of money investing in the capability. We just have to execute. And when you take a look at proximity marketing could take us into as many as 15,000 locations over the next couple of years. If you take a look at our finance business, that explosion of contracts building upon each other and building that revenue base year over year, month over month, will drive a huge amount of both revenue and ultimately profit to our bottom line. If you take a look at those businesses, we're a tech business. Customer communication is about technology, and the world loves technology right now, and we see great multiples on that. Plus, we got this great finance business, and recent transactions in the finance business where companies like us sold their portfolios was at 2 times what was deployed, the capital deployed, 1 to 2 times capital deployed. This year we expect to deploy about $30 million, and if you take a look at that, that would double our market cap right there alone.
So we definitely wish you a lot of good luck for 2015 on the projects, and we definitely look forward to hear back from you, Bob.
Great. I look forward to being back.
Thanks so
much.